Hey, what's going on, everybody? Today we're talking Ethereum, ticker symbol ETH. As a disclaimer, this is not investment advice. This is just another research video that I put together and sharing with y'all, meant to be educational as well as entertaining. I had some help putting this video together with my cousin Joel Benavides. We go into a little bit of philosophy as well as psychology into trading and investing. So, of all the weeks, I felt this week was interesting and fun to get into the crypto market. We had a bit of a pullback, so I definitely had some help putting this video together. So, I'll leave all the sources of the video in the description below. There'll be links to the articles that I used to put this research video together. So, hopefully, y'all enjoy. Let's get into it.
As a currency.
Now, in the interest of making this a standalone podcast, so people are not going to go back and listen to all the other podcasts that we've done, explain very briefly, if you could, what is Bitcoin and how does it work?
I'm glad I have this opportunity to do it again, because every time we have a new audience. So Bitcoin is internet money. It's a system of money that exists on the internet, was created on the internet, and it allows you to send and receive value the same way you can send and receive an email anywhere in the world, instantaneously, without intermediaries. And that's kind of what you see at first glance. Behind that, it's a whole platform. It is, as the title of the book says, the Internet of Money. It is a set of protocols that allow you to basically exchange value with other people. But you can do a lot more with it than just that. Most people will use it as a currency. It's basically money that you can transmit from your smartphone to somebody else's smartphone directly, just like cash, but electronic. And the thing about it that's unique is that it's not owned by any corporation, any bank, or any government, just like the web isn't owned by anyone, or email isn't owned by anyone. And there's lots of companies that can send and receive email. There's lots of companies that can set up websites. There's a lot of companies that can set up applications that use Bitcoin.
Okay, so who was it, right? That's Andreas Antonopoulos. He is a Bitcoin advocate, tech entrepreneur. In 2012, Antonopoulos became enamored with Bitcoin. He eventually abandoned his job as a freelance consultant and started speaking at conferences about Bitcoin. According to his podcast, Antonopoulos is a consultant on several Bitcoin-related startups. In April 2014, Antonopoulos organized a fundraising campaign for Dorian Nakamoto, who was identified in a Newsweek article as the creator of Bitcoin, Satoshi Nakamoto. So apparently this Nakamoto guy started Bitcoin. On 8th of October 2014, Antonopoulos spoke in front of the Banking, Trade, and Commerce Committee of the Senate of Canada to address the senators' questions on how to regulate Bitcoin in Canada. In December 2017, unsolicited donations of over 100 Bitcoins were sent to Antonopoulos by over 1,000 followers of his work. That's pretty cool. Let's look at his bibliography: Mastering Bitcoin, Unlocking Digital Currencies, Mastering Bitcoin 2nd Edition, Mastering Ethereum. I should probably read that. So that's a little bit about who that guy was. I'm going to jump into this article, Bitcoin versus Ethereum, which cryptocurrency will win, from Eric Elliott. Begins by showing us a graph of Bitcoin and Ethereum and how there are some similarities into the movement of the price. A misconception: Bitcoin and Ethereum are currencies and should be judged by how good they are at being money. Reality: Bitcoin and Ethereum are crypto networks. Another misconception is Bitcoin and Ethereum is a zero-sum game. Reality: Bitcoin and Ethereum complement each other, and asset diversification reduces risk. Okay. Misconception: Bitcoin and Ethereum are currencies and should be judged against each other by how good they are at being money. The reality is that Bitcoin and Ethereum are both decentralized computation networks. They have each made engineering trade-offs that make them good for some use cases and bad for others. The Bitcoin network isn't money, it's security. Bitcoin is the most secure, decentralized, immutable ledger in the history of computing. It features Turing incomplete smart contracts that limit the features that bad actors could potentially exploit to steal assets on the network. And its security is backed by mind-boggling amounts of hash power, which has increased exponentially over the past decade. Interesting. The Ethereum network isn't money, it's programmable value. Ethereum is great at creating tokens which can represent fractional ownership shares, vested interests, controlling votes, access and permissions, the ability to share control over assets with people you may not trust. Okay, so it's programmable value. Interesting. Potentially, Ethereum could replace the stock system, reinvent insurance, and break your dependence on banks for things like checking accounts, saving accounts, and loans because Bitcoin chose security over flexibility. Bitcoin can't do those things. But Ethereum's security is far more questionable than Bitcoin's. With all of that additional flexibility, there is also a far larger attack surface for hackers to exploit. But what if you could conduct your transactions on Ethereum and then immutably record their state on the Bitcoin networks periodically for additional protection? Okay, so there's more potential for risks. That's what it sounds like to me. Um, so I don't know. I don't know how to feel about that. Bitcoin versus Ethereum. The question hardly makes sense. Imagine both Bitcoin and Ethereum operating as complementary protocols underlying a multi-trillion-dollar internet of value. Both can win. Okay, that sounds promising. Eric Elliott is the author of books, composing software, and programming JavaScript applications. As co-founder of EricElliottJS.com and DevAnywhere.io, he teaches developers essential software development skills. He builds and advises development teams for crypto projects and has contributed to software experiences for Adobe Systems, Zumba Fitness, The Wall Street Journal, ESPN, BBC, and top recording artists including Usher, Frank Ocean, Metallica, and many more. Ethereum is an open source public blockchain based distributed computing platform featuring smart contract functionality. Ether is the cryptocurrency generated by Ethereum platform as a reward to mining nodes. Okay. Ethereum provides a decentralized virtual machine, the Ethereum Virtual Machine, EVM, which can execute scripts using an international network of public nodes. The virtual machine's instruction set, in contrast to others like Bitcoin script, is Turing complete. Gas, an internal transaction pricing mechanism, is used to mitigate spam and allocate resources on the network. Ethereum was proposed in late 2013 by Vitalik Buterin, a cryptocurrency researcher and programmer. Development was funded by an online crowd sale that took place between July and August 2014. In 2016, as a result of an exploitation of a flaw in the DAO project, smart contract software, and subsequent theft of 50 million worth of Ether. Ethereum is currently developing and planning to implement a series of upgrades called Ethereum 2.0. Current specifications for Ethereum 2.0 include a transition to proof of stake and an increase in transaction. Cool. Another article, Crypto Tidbits, Bitcoin fails at 10K, Ethereum coins explode, Coinbase looks to add 18 altcoins. After adding Maker and a swath of other altcoins over the past few weeks, Coinbase is looking to expand its horizons even further. In an announcement published on June 10th, the leading crypto exchange revealed that it is looking to add 18 new cryptocurrencies in the coming months. They include Aave, Aragon, Sidecoin, Synthetix, VecChain, and Digibyte. The altcoins listed saw an immediate surge in value, with investors speculating that a listing on Coinbase would result in an influx of interest in the listed projects. Okay, so there's going to be more cryptocurrencies. This is what they'll look like. I'm not even quite sure what you would call the brand, the shell, the face of the crypto coin. Fidelity Investments find there is still institutional interest in Bitcoin and crypto. $2 trillion asset manager Fidelity Investments released a survey this week outlining institutional habits in the cryptocurrency space. The report, conducted in association with a data firm, found that 36% of the respondents have a stake in the cryptocurrency space and that 80% of the respondents are interested in the industry. Apparently, institutional interest in cryptocurrencies is being sparked by three core characteristics of cryptocurrencies: their uncorrelated nature, their innovative technology, and their high potential upside. So this is what gets my attention, that an institutional investment firm like Fidelity is getting behind these things. I'm going to drop you into some technical analysis with me and my cousin Joel Benavides.
I mean, that bodes well for an investor.
It's like it's a good rule of thumb to like develop your plan and decide how you're going to execute the trade first. This like that was kind of like an on the spot thing because you did tap on my emotions right there. It's like yeah, it's a good entry point. You know, you could get the bottom if you buy right now, but then you might not. So the only way to like really hedge your risk is to come up with a plan ahead of time. Say, I'm going to execute this plan. I'm going to document everything about it. I'm going to document not only when I came in and when I came out, but what I was thinking, where I thought it was going, even what the weather was like outside. Because some traders will find that they trade terrible when it's hot outside or when it's raining. And there's no rhyme or reason. Maybe it's just affecting some part of them psychologically and they're depressed because it's cloudy and rainy outside. So after they take on so many trades and they build up that data over time, you know, you say, okay, I am not going to make any trading decisions today because it's muggy outside. And that somehow screws with my decision making. It doesn't seem like it would. It doesn't sound like it makes any sense, but good traders will do that kind of stuff. So yeah, it's a good entry point. Would I take it right now? No, because I personally have not developed a plan. I haven't done my due diligence. I haven't, you know, done any of that stuff.
Right on. And I literally just purchased $5 at 228. I just did that right now. And, you know, I feel okay about it because like you said about my due diligence and all that, as you're saying that, that literally, it just, not that I'm looking for signals, but that's exactly what I am trying to do here, right? I'm trying to dollar cost average my position. And since I entered at 240, well, I mean, okay, so I'll take the difference, right? 228, 240. Okay, somewhere in the 30s, you know, okay, that's okay for me. That's where I see myself, even though I am way off of where I originally wanted to be, right? I should have gone in at the 200 mark, but because of different factors, right? Of me saying, well, let me be more patient. And then sometimes that can come back and bite you. If you're too patient and you just say, okay, well, I missed that train or whatever, I'll come back the next day when it. But look, we're seeing it now as it's doing what it's doing. It just reaffirms all of the things that I've been, you know, in my notes, going through my notes. I'm saying, okay, well, what's Ethereum doing, and checking it. And a lot of investors, like, I don't look at this. I don't look at the price every day, or I don't look at the market every day. I do, since I am in this for a certain time. So if I have an alert where it's coming down at a certain price, and I do want to get some at that price, just to dollar cost average. That's kind of where my head's at, really.
With respect to where the price is going, when I told you that, I was looking at the 4-hour chart, right, on Ethereum, on Coinbase. And I say that because, like, the price is going down. There's a diagonal level of support that we're getting near, and we're also getting near this fib level. Remember, we talked about fibs and how the whole universe is built on this number 1.618, and there's, like, very frequently, when you measure a major move properly with a fib retracement tool, you get these turnarounds at these key fib levels, right? So we're getting a diagonal level of support, an upward diagonal level of support, and a fib at the same time. And so these are strong support levels. So I can see us bottoming out around here. It might drop outside of the channel even because the fib is just slightly outside of this upward channel. But I could see us kind of like consolidating for a few hours and maybe coming up tonight. But one thing to keep in mind is if you look, you know, every time you get these triangular patterns, you get breakouts at the end of it. You know, these are important, like, areas to pay attention to. And so, yes, you know, you bought right here at 229. We could possibly come up to 250, but then again, like, at that point, I'm gonna be on high alert. You know, if it rides the bottom of this support, I'm gonna be on high alert anyway. But really for like a long-term position, you want to look at like a daily chart or a monthly chart. So when we pull out, we look at this daily chart. This upward trend is going to reach a key level of resistance at 253 and 68 cents, because that kind of is where the top of the fib is from this recent drop that we had with COVID. So there are significant levels of resistance above us. That is what you just did, buying that Ethereum, I think is like maybe a good 4 or 5 day move. But the fact that we're at the top of this recovery long term, as a long term investor, I would actually be considering shorting, because we only have like, I would classify what you just did as like a swing trade, you know, or maybe even like a day trade over like 2-3 days, because over the next couple of days, and you know, it could be any day, but I think over the next couple of days we will be making our way down.
All right, well, that's a little insight as to where my head was at. I'm just showing y'all my purchase that I was speaking about in that video. I want to thank my cousin Joel for that. We go, you know, a little bit into the psychology of trading and investing. So, you know, just showing you where my headspace was at during that move. And I hope you all enjoyed that little part right there. Why a mysterious Ethereum user paid $2.6 million to send 130 of crypto from Forbes. So, again, talking about the security of Ethereum or lack thereof. So this article kind of just played into my concerns with Ethereum and cryptocurrency for that matter. The transaction contained a fee more than 10,000 Ether, equivalent to 2.6 million. On the Ethereum blockchain network, users can send and receive crypto payments or smart contracts by paying a fee to miners. According to Ether Gas Station, the recommended fee for a standard transaction is 0.153. For a faster transaction, the fee can go up to 0.2. Okay. But the Ethereum payment in question attached a fee that is over 13-fold larger than the recommended cost. In an interview, Set product marketing manager and ETHUB co-founder Anthony Sassano said the absurdly high fee is either a mistake or possibly an attempt at money laundering. The latter is unlikely because the fees go to miners on the Ethereum network. Unless miners are working together with the sender, there is a higher probability that it was mistakenly sent, Sassano explained. It could have been a mistake, some form of money laundering or washing. It was mined by Sparkpool, so they could send that Ether back to the original owner if they wanted to. He also explained that the wallet address that sent the transaction likely comes from a crypto exchange. If so, in theory, the exchange could communicate with the mining pool to try to recover that multi-million-dollar fee. Public blockchain networks like Ethereum that are fully decentralized cannot revoke transaction or smart contracts. When a payment or data is sent by mistake due to the decentralized nature of the network, there is no way to reverse it. So unless whoever is mining it decides to give it back, it's gone. That's what I got from that article. Interesting. I just wanted to shed some light. I added to my position at this price here. I am currently recording this video Sunday, June 15th, 2020. So I'll just leave it here on the Coinbase.com website. They do an excellent job of explaining in detail what is Ethereum, how to use Ethereum, a lot better than I will ever be. I find it very fascinating, though, how it works. So I'm in the crypto game. Thanks again to my cousin Joel Benavides. Be sure to follow his channel. I'll link it in the description below. So until next time, I hope you all have a good week. All right, take care.